Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the week ended August 1st, 2012, the conventional mutual funds industry, exclusive of exchange-traded funds, saw total outflows this week of about $4 billion. Let's take a look at our macro groups and see where the activity was. Starting off, we saw equity funds with about $3 billion in outflows. Taxable bond funds had inflows of about $1.4 billion, municipal debt funds about $500 million in, and finally money market funds had about $4.4 billion in outflows. Now, despite the Dow's return to 13,000 earlier in our flows week, equity fund investors really couldn't get behind the momentum. Let's turn our attention to the activity in equity funds and see what happened. Again, about $3 billion this week follows a $2 billion outflow last week, so 2 weeks in a row of $2 billion plus outflows. That's not a harbinger of better momentum to come, in my view. We saw some decent activity in a few other areas, such as equity income and emerging market funds, but still, the bulk of investor core assets in large cap core and large cap value continued to suffer outflows. Investors also allocated more money to non-domestic than to equity funds this week, a trend that hasn't been broken but for a few weeks this year. Interestingly enough, so far this year we've had 31 weeks of flows, and within them 15 of them were inflows and 16 were outflows. Those 15 weeks of inflows only averaged about $700 million each, while the 16 weeks of outflows averaged $1.1 billion. So just looking at the averages, investors have been more willing to sell than they have been to buy this year. I think this reflects the tone in the market overall and suggests that it's going to be hard to change investors' attitudes towards equity funds anytime soon. Now let's turn our attention to equity ETFs. They had a very different week of flows. They had about $8.9 billion in inflows this week, largely held up by SPY. It took in about $5.6 billion in inflows. That's nowhere near a record for this monster ETF, but it was a solid showing nonetheless. Now last week, ETFs had about $9.2 billion in outflows. So perhaps when the Dow reached about 13,000, that investors were tactically allocating into equities, trying to get ahead of any market momentum, lacking that follow through in the rest of this week. We'll see what kind of flow numbers we get out of this. But for the most part, it was a pretty decent showing for equity ETF funds. Let's turn our attention now to taxable bond funds. About $1.4 billion in inflows this week. This is much slower from last week's total, and perhaps, again, investors on this side of the equation got a little spooked by the Dow's strong showing, and so they held back a little bit. Products from double lines, such as the Total Return Fund, continue to be strong acquirers of new assets. We also saw some decent flows from the GMO Treasury Fund, as well as the Oakmark Equity and Income Fund. Despite having equity in its name, it is in the fixed income universe at Lipper. It also was one of the top money gainers this week. The next group we're going to take a look at is fixed income ETFs, and in here we saw decent flows. They were about $2 billion this week. This is their third best week for flows this year. The well-known ETFs such as IEI, HYG, and TLT were the week's big winners, while LQD, which was a big winner last week, had outflows this week. So a little bit of a change of heart by a few investors. Next group to take a look at is municipal debt funds. Again, about $500 million in inflows here, a slowdown from last week. Again, investors taking a little bit out of the market, but still continuing to put money to work. Perhaps news out of California with bankruptcy pending in San Bernardino and a few other communities caused investors to hold off a little bit, but overall, one of the biggest gainers this week was California muni funds. They were second to a high-yield muni debt as far as inflows go. So clearly, California investors living in a high-tech state couldn't be spooked by headline events. They continue to put money to work in their state. The last group we'll take a look at is money market funds. About $4.4 billion in outflows, substantially all of that was due to institutional investor behavior. The retail side actually added about $100 million, which is pretty flat for an industry of this size. Overall, a little lighter activity here than we've seen in a few recent weeks. We continue to see outflows, though, overall for money market funds this year as yields have gone nowhere. Well, thanks again for joining us for this week's analysis. Join us here again next week as we take another look at the flows industry for both mutual funds and ETFs. Also, feel free to join us online at lipperusfundflows.com for more up-to-date information. Thank you.